Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 22nd of November. All right, now, the key theme, the dollar poised to halt slide after the Fed minutes, right? I think the news services are getting a little bit liberal here. The Fed minutes, going back to, the meeting of the 31st of October to the 1st, we've had the US CPI and the non-farm payrolls both weaker since then. So I don't think this slight upward tick in the dollar is of any concern at all. In fact, I'm surprised the market even sort of moved with it. I think, if anything, it looks like the market is just sitting here looking for a reason to probably take some cash off the table. So the dollar index has come back a touch, but overall, I see no change in the dollar theme, and I'll be looking to sell rallies from this point. Don't forget, the CPI is basically, sets the trend. So when we are looking at the major instruments, to me, the dollar is going down. You stick with that until something changes. Okay, so right now, I see a little bit of a dip there in the euro as well, but it's going up. So is sterling, Aussie and Kiwi. And don't lose track of that. So the support levels are developing, right? This is what you get in sort of new trending markets. Okay, resistance on the top side, the dollar pairs, dollar yen, a little bit tricky, but you'd probably be looking to get short up towards that resistance level around the cloud. Dollar CAD, well, we had slightly weaker CPI numbers yesterday, but as I was saying in yesterday's preview, dollar CAD's caught between a bit of a rock and a hard place. A weak dollar, strong oil, and sort of mixed Canadian numbers, right? To me, oil is the key here. If oil rallies, that's going to put downward pressure on dollar CAD, and that's when we're going to see dollar CAD or the dollar move catch up with the other major instruments. It's probably one of those trades just sitting there waiting to happen. Now, if we have a look at the global equity markets, we've got a potentially short-term trade coming up, and it's a little blip to the downside. Okay, we've got trending markets, but even in trending markets, you get slight pullbacks. Now, each of these US equity indices are resting on support levels. Now, when the market's long, it can only go one way, and there'll be a slight blimp to the downside, right? What it might be is a US number slightly stronger than expected. You get a slight pullback down in the equities. It flushes out the weak stop losses, right? And then kicks back into gear in the trend, right? That's normal trend behavior. Okay, so the equity indices look very good. They're a little bit starved of oxygen of fresh numbers, but today we have the US durable goods numbers to sort of really kick things along. So there's not much to do technically, right? Redraw your new trend lines. You can't change where euro is. It's sort of still in the middle of nowhere. And with it sitting up here above 109, support down below 108, traders are going to sit there and wait for momentum, right? Slightly stronger US durable goods numbers, it'll probably drift lower. Or weaker US numbers, it's going to get more momentum to the top side, right? And that's what we're looking for with connecting the technicals with the fundamentals, right? You can't help it if some of these charts or instruments are in the middle of nowhere. Now, today's key data, US numbers, and it comes at a good time, right, where the market's looking for information about the US dollar. So the US durable goods, great historical number, initial jobless claims, Michigan consumer sentiment numbers, well, they're the final numbers, but I'm thinking with the non-farm payrolls week, US CPI week, this will really confirm if the dollar is in that transition, right? Which will go against the FOMC minutes, which came out today. Okay, so weaker numbers here, it's easier trade because that is the new trend that is in play. So to me, instead of trying to guess both sides of the market, I'm looking to connect the fundamentals with the technicals. A weaker number across the board does this, right? In particular, durable goods, of course. If we get an extra boost there with the initial jobless claims, well, that's a bonus on top. All right, so just stick with your numbers, stick with the trend, right? To me, the dollar is going down. So the dollar index, dollar Swiss, yeah, perfect. Do I trade euro at this level? Maybe not, but I've got sterling, Aussie, and Kiwi with close support lines to get me into the trade at a better optimized level. As I said, dollar CAD, if oil rallies, dollar CAD's a sitting duck and will go down. Right? It goes with that weak dollar sentiment. So that's something you need to be considering. Dollar yen, right? It is going to go down with a weak sentiment. Japanese traders will be looking to sell around the cloud Everyone else may be a little bit closer towards that resistance line. The Ichiban strategy, possibly the best to look forward to. Now, market mechanics. Okay, don't get over confused things. We've got the technical levels. We've got some data. US bond prices are up, yields down. That should give us a weak dollar, okay, as we go through the Asian session. Euro, sterling, Aussie up. And what I would expect during the European or North American session is the risk-on profile to kick back in with equities rallying, right? That's our ideal scenario. It goes with the trend. And all we need is the US numbers to fit into that picture. And away you go, right? So, as I said, this isn't rocket science. We need the market dynamics to work. We've got the levels. We just need the numbers to come out weak. Good luck and happy trading.